And then if I've kind of overwhelmed you with all those more advanced strategies up to now, something you can do that's a little bit more basic is that credit shelter trust. So this is something you just put in your will or revocable trust, where you leave assets up to the deceased spouse federal exemption amount, or if you live in a state with a state estate tax, the state exemption amount. Kind of the same idea as that SLAT. So you use the exemption amount, and then any growth in that trust between the first and second spouse's death remains outside of the surviving spouse's estate. So this allows you to lock in the exemption amount. I mean, this can be very important for if one of you dies, you know, between now and 2026, you can lock in that 13.61 million exemption amount, plus all appreciation associated with it. So I know a lot of people are saying, well, why do I need this? Because I can use portability. The credit shelter trust, again, it gets that appreciation out of your estate. Whereas if you just use portability, that appreciation stays within the surviving spouse's estate. And so what the benefits of this trust, beyond, you know, the appreciation aspect of it, is the surviving or the deceased spouse can control where those assets go when the surviving spouse dies. So the surviving spouse gets access to those assets during his or her lifetime, but the deceased spouse is still saying, okay, upon my surviving spouse's death, I want these assets to go to my kids. And so it protects against, you know, the surviving spouse. If you have a blended family, it makes sure the assets go to your kids and maybe not your spouse's kids. And it also protects those assets against maybe a subsequent marriage from the surviving spouse. And assets in the trust also tend to be protected from creditors. So, you know, if you're the surviving spouse goes out and gets in a bad car accident and gets sued, those credit shelter trust assets are going to be a lot harder to reach than the assets that are in the surviving spouse's individual name. So that's something that even if you aren't going to do anything, you know, from points 1 through 6 that I went through, I would highly recommend that at the very least you do that credit shelter trust. Put those within your estate documents and make sure that irrevocable trust is funded upon that first spouse's death.